Good morning, everyone. Thank you for joining us. This is David Moore of Equity Advantage and IRA Advantage. And we have today an Ask the Experts episode. We've got Darren Powderly, the founder. I always say you're the founder of this CrowdStreet. I know that you've got co-founders involved, but I'm gonna turn it over to you, Darren. You've been a friend for a long time. And when you were getting things rolling on this, you got a whole group of us together, and I think you bribed us with some appies and cocktails, and of course you're going to fill the room with us older guys there, and we had a great time when you were just sort of planting the seeds of this whole project, and now it's here, and it's been here for a number of years, and you guys are doing very well. So I'd like you to tell the audience a little bit about you and a little bit about your baby.
Thanks, David. I really appreciate you having me on the show today, and hello to all your viewers. And yes, that was 2013 when we got together in Connie Rathbone's conference room in Portland. And that was the idea generation stage of the startup that came to be known as CrowdStreet. I had the initial concept in 2012 and I had incorporated it in 2013, but was really just still putting together the bones of the business plan as I was still actually in the brokerage community, yes. CCIM, and active with the Portland, Oregon CCIM chapter, which I had been active with for 10 years at that point. So, you and I known each other for probably going back to like 2005 or something, since I started to get involved in the CCIM Portland chapter there. So great people, and you guys were kind enough to give me some early feedback. And I would say that was one of the most important parts of starting a business. And so for any entrepreneur out there that's thinking about starting a business, it's that interview process of your constituents, of your potential customers, of the influencers, of your friends. It's like you're bouncing ideas off, like, is this crazy? Is this smart? Is it both? And that was a great brainstorming session that day, which was one of the many stepping stones that kept me going forward. Right. So I appreciate you guys giving me the feedback, and, you're part of the chapter, the early story of CrowdStreet.
Yeah, it was fun. It was a lot of fun.
So just a quick, what is CrowdStreet? CrowdStreet is an online marketplace that connects individual investors like me and you and all the guests listening today. We're all individual investors, to commercial real estate firms with a track record, right? Track record of doing what they have done in the past, that matches the asset that they're presenting on the CrowdStreet marketplace. So it's really a listing platform of sorts. Yeah. It's a marketplace, and CrowdStreet's business is to connect two parties. So many people in the past have heard about friends and family syndication, right? The private real estate investing, where it's like, your country club investors is another terminology for it. And that's been around for a long time, but it was never done on the internet with scale. And so that's what we did at CrowdStreet. We took real estate syndication, we applied internet and this digital platform to it, and we took it nationwide. And today, thankfully, after 6.5, almost 7 years of business, we've got 120,000 members of our community. Those are just individual investors, just like, everyone listening today, as well. And the other side, we have these curated, what we call best-in-class commercial real estate companies that are looking to raise money. So we got the demand side of the marketplace, which is the people that want to invest money. And then we have the supply side of the marketplace, which are the real estate companies that are looking to raise money to acquire or build, a real estate project for the purpose of investment. And so that's the CrowdStreet business model, and it's come a long way. We've raised $1.3 billion since we formed, and over 500 commercial real estate investments. So we've all over the country, almost every single state, every asset type, every strategy, from income to ground up development. And so it's really a way for these individual investors to build a diversified real estate portfolio online.
So you guys done such a great job matchmaking for real estate. Maybe you ought to get in the dating world too.
One time I described the business and it took me solid 10 minutes, and the guy was like, so it's kind of like Match.com
yes.
for real estate? And I was like, exactly. He's like, well, why didn't you just save me 10 minutes and tell me that? I'm like, okay.
Yeah. Well, it's interesting. And the thing is, we've got such transformation in the real estate world right now, and just people's ability to, buy things or actually manage things today. And so the question is, for people that want to further diversify, and you've got this push to quality. And you've got right now, we've got a world that's pretty shaky, and you've got a situation where there's a very large push for tangible assets, obviously. And I like to say real estate's a real investment, and I always capitalize REAL. It's considered, as you know, an alternative investment in so many investment circles. And I just think that's ludicrous. I mean, it's name an older investment than real estate. I mean, it's just not out there. And so I think you guys are, doing it, those early meetings. We're really curious about the structure that you use, and how you were going to track stuff. We understood, getting it up there, but what kind of ownership structure do you use, Darren? And I know that we talk about getting qualified money, IRA 401k money into your projects, and we can talk about that process in a few minutes. We've also talked about the applicability of 1031s in or out of your stuff too. So, for our people in both those spaces, could you just briefly describe structure and maybe typical investment life, and then when the project goes full cycle, what happens with it typically?
Sure. The majority of our offerings on the CrowdStreet Marketplace are private placements. They're in the form of partnerships or LLCs. That's the majority. And there was something that changed in 2012, David. It was a law that changed called the Jobs Act, which enabled advertising of these private placements. And that was the first time that had been illegal or become legal for like 80 years. So that was a game changer for the overall investment industry, and was one of the key elements of CrowdStreet coming into business. So their Reg D offerings, their Regulation D 506Cs, which means that we can advertise them.
Yeah.
We are an advertising platform, one of the core things that we do. And so therefore, the investors are coming in, they're signing a subscription agreement into an LLC that they are the limited partner. The sponsor or the real estate company is the general partner. So the investors signing the subscription agreement, and CrowdStreet's not a party to those agreements because of this, Match.com, this direct to consumer connectivity that we create, right? Which is something that's rare. We're one of the only companies that do that. And the investors like it because they get closer to the real estate, and they're directly investing with these pre-vetted institutional quality commercial real estate firms that they're not going to really be able to meet on their own. So they meet them on CrowdStreet, and then they actually wind up doing all their homework about them and the property and the structure, which is what we're talking about now, the third piece of the pie here, or at least the review process that we go through. We review the sponsor, the real estate company, the property, and then we review the deal structure, right? And the economics and the splits and the fees and all that stuff. So, but the investors are signing a subscription agreement of a Reg D 506C offering most of the time. Secondarily, we do have some Delaware statutory trusts, which would accommodate, a 1031 exchange money. Sometimes we have TIC agreements that are incorporated into the offerings, but a little bit more rare, I must admit. We would still like to see more of those type of offerings on the CrowdStreet Marketplace. And we have we have dozens of these sponsors that have applied and have been accepted at some point in our history for the CrowdStreet Marketplace. And so that is that kind of relationship that we have with sponsors. They have to apply. We underwrite them. We do background checks, and we accept them. And some of them specialize in 1031 exchange eligible offerings. And so you'll see them up on a CrowdStreet Marketplace. And then occasionally, actually, rather often, we have investors who come to us and say, I'm in an exchange, can you help me out? And at this point, we're just kind of like being part of the community. We're just, kind of directing people to, if we don't have something on the marketplace right now, or maybe we only have one offering, we're sort of helping the community by directing those investors to some other partners of ours. And so, so that's the typical structure. You mentioned SDIRA, which is, how do these investors invest in these offerings? They're most often just cash investors, but about 30% of our investors, a big or a healthy percentage, are investing through their IRA accounts. And so they're working with IRA firms where they've set up accounts, custodian accounts, and they're investing directly into the offerings that they find on the CrowdStreet marketplace via their IRAs. So those are important partnerships of ours because we have a mutual client, and that's one of the things that, of course, brought us back together.
Yeah. So Darren, the debt on these projects, somebody buying in, is recourse, non-recourse debt? Or is that project by project dependent?
We have parameters. We don't allow offerings to be approved for the marketplace with a debt over 80%. And so most real estate projects, as you know, as experienced investors understand, are going to have debt. We see debt generally range from 50% on the very conservative side up to 80%. The average debt, you know, in part due to some of the restrictions coming out of the great financial crisis. And one of the benefits of the great financial crisis, you might say, that prepared us to better withstand this current crisis, the, you know, COVID-induced recession, is that, you know, properties have generally lower debt. So we look at deals, I think the average debt is probably around 68 to 72%, right? So you know, reasonably low compared to what was going on, you know, going into the great financial crisis 10 years ago. And, you know, we have mostly just senior debt, and it's if there's recourse, it's by the general partner or the principals of these sponsors, right? And not by the limited partners that are the CrowdStreet investor members, because they're investing in very small increments, David. They're investing in, you know, $25,000 increments or $50,000 increments.
So you're talking about that. What is the floor? I mean, what is the minimum investment you're going to accept, and what would be an average investment size? I mean,
the minimum investment, we've tested a number of things over the years, and we'll continue to test, right? Yeah. The minimum investment today is $25,000. So we settled on that after numerous years of experimenting. The average ticket size across the entire platform is about $47,000. And it's been a bit remarkable to see that kind of plateau right there over years. And it bumps up and down. So 42 to, you know, $50,000 or $52,000. So it does go in that range, you know, on any particular deal. But that's the average ticket size. There's really no maximum. And so we definitely have investors that come and, you know, they write $1 million check. And for them, that's on par with what would be like a $25,000 check for some of the others, or even $2,500 check. So next year, it's interesting. We're looking at ways to engage the community. And, you know, minimum investment size is one of those things we'll be looking at again.
So are those people that come in with $25,000 or $50,000? I mean, what that money is it's cash out of pocket, or, I mean, are they diversifying through a self-directed IRA, 401k? I mean, or what's their background? If somebody gives you 25 to 50, what's their background? What are they used to? Are they familiar with investment real estate? Or they just, what's?
Yeah, the community of investors. So anyone is welcome and free to join up in CrowdStreet, anybody. And we have a lot of people who join for various reasons, like education and just see what's going on, getting the aspiring accredited investors, right? Students, and just anybody can join, right? Other industry participants that are just curious to figure out what's going on with this online real estate investing trend. How does CrowdStreet present the materials, right? It's one of the things that I encourage everyone to do. It's like, whether or not you invest is a totally, you know, like next step thing, but like, come on board. You'll receive a bunch of educational materials, right? Just as sort of like our welcoming to CrowdStreet, you know, an ebook and a number of other different things. Then just by studying or reading the presentation, right? The written content about an offering, and then attend a webinar and hear the presentation from the actual real estate company itself, right? Then get into the financial models, right? The detailed quantitative analysis, and, you know, ask a bunch of questions. There's glossary connections. And so just simply for the education of learning investment real estate on a national basis, it's like invaluable. It's, you know, you spend enough time on it, it might be more valuable than, or it might be as valuable as some of the other, you know, pay for courses out there. Let's put it that way. It's pretty helpful. And then, you know, the investors, we survey them all the time, and we know who they are for the most part, Because we focus on accredited investors, and that is because of regulatory direction, rules and regulation on a national level. It is also because when a business starts out, you want to sort of prove the model. You want to build a strong enough business that you can withstand shocks to the system like we're going through right now. And you want to go to like a core sort of, audience. And then if you can build a business there, which for us is accredited investors, then you can sort of, keep building it outward, right? And we have plenty of room to grow our investor community by going to, aspiring accrediteds or sort of middle class and people that, have saved and they've worked really hard to build a nest egg. And now they want to start to invest in real estate because they understand that that's not even an alternative asset class, right? It is a core asset class: stocks, bonds, real estate, right?
No real estate, then stocks and bonds.
There you go. I had it flip. But we understand who they are today. They are accredited investors, and they're nationwide, live in the pockets in the cities where you can, find more, pockets of wealth. That's sort of not surprising. But what is wonderful is that it is a nationwide community and all quite active. And, a lot of people looked at the CrowdStreet investor community and said, okay, well, they're active now during the good times, right? This is pre-COVID. We'll see what happens when we hit a recession, right? Nobody thought it would be a shocking recession like this one, but we've been incredibly grateful to see the loyalty and the activity of our investor community, right? They're in full force, really, and it's expanding rapidly. Our investor community is expanding very, very rapidly at this point in time, and we've been really thrilled with some of the reviews of that we're getting from the investor community. So
Darren, the thing, I look at it, and it's, you and I have been in real estate for a long time, and I grew up in the Bay Area, moved up here in '90 to buy property, and it was different then, right? I could buy a house for $23,000. I did, right? Apartments were in teens a door, and that was fun. But so often, especially like with retirement accounts, people come in and they want to diversify into, hard assets, and yet they're just putting in a retirement account together, so they don't have enough in there to go buy something. And like you said, $25,000 today, you're not going to buy anything on the West Coast for 25. You can go back to Detroit, and I used to joke a few years ago, you buy 5 houses for 25 back there during the last crash. But the deal is, through your platform, it just appears to me, and I'm curious, obviously you've got the ability to diversify smaller amounts into different asset classes nationwide, really, through your platform. But are you seeing a lot more interest in your product, just with the changes in rent control and all the other issues coming up with just, what it takes to manage your own asset today?
Sure.
And like you said, there's been some changes that allow you to advertise and all now, but it just seems like people aren't that aware of what's out there. And my purpose, as we discussed earlier, to get you on was, I want my investors to have every opportunity out there. I want them to know what's possible. And somebody comes in and says, gee, I don't have enough money in my retirement account to go buy a piece of property, but I want to do that. You're going to be a solution for that. There's other companies we deal with for hard money stuff and different things there that allow them to diversify. But I see your product as a place for people, if they want to get into real estate, own an asset without having to deal with the management, but they want that direct ownership with a smaller amount, you're going to be a place for them to go. Or like you said, if they want as much as possible. But is there a trend? Are you seeing more energy just with all the changes and possibly even with COVID, with property owners being told they have to sit tight while the tenant doesn't pay their rent? What those people, are you getting more calls from people like that looking for a place to go?
Lots of great topics there. First of all, like 30% of our investors are investing via their IRAs, right? And so self-directed IRA firms like Equity Advantage are very important partners of ours. So we have a mutual client that we're both trying to serve, and we're coordinating paperwork and just making sure that they're receiving the best direction possible. So that's key. And what are their drivers? it could be everything from, and they're retired, and we do have quite a few retired people that are looking for income. Everyone's searching for yield, no matter how old you are. If you have any money whatsoever, you're searching for yield. And, we have investors across the risk spectrum. We have investors that come to us primarily to take a little bit more risk on the spectrum, if you will, because they have found other areas of their portfolio, right, where they feel satisfied that they have some income and some, other type of stocks and bonds that they've built, right? And they come to CrowdStreet because they don't have any ground up development of an apartment building in a hot market that's, one of the more attractive markets to invest in. So they come to CrowdStreet, like, where are those markets? So I want to learn about, what are the markets that are hottest to invest in 2021? Well, we do a ton of research on that. We've got data and data scientists, evaluating market, and, we're pulling information in from all the third-party data providers, and, ULI, does a great job of saying, like, these are the hottest markets in the country based upon the data that's available when they publish it, right? Raleigh, North Carolina right now is the #1 market according to them, but, different, data companies would point you in different ways. So the motivation from the investors that are coming to CrowdStreet is to truly build, to supplement their portfolio, to add real estate as a larger piece of that pie, that slice of that pie. And there's a lot of potential there, as you mentioned, because, I think we're underinvested as an investor community in general in real estate, where some of the pensions and endowments have like 20 to 30 to 50%. Some family offices are strictly in private real estate. Most individual investors own their house and they have the equity in their house, and maybe some REITs, but it's like 5%, right? And it maybe should be like 15%, depends on which advisor you ask, right? And so we're giving these investors a way to, get access to this asset class by and large, and to build a diversified real estate portfolio online. We've partnered up with groups like Equity Advantage and others to be a part of that ecosystem, kind of a best of breed ecosystem, so that the investors know, like, okay, I want to pull this money out of my IRA this time, right? Because I have money to invest there. And maybe next time, maybe they sold an asset on their own, right? Maybe they did own a duplex in Portland or Lake Oswego or something like that, right? Anywhere USA. And whether or not they're going to roll the money in a 1031 exchange, right? And park the money with you guys, or they're just, they paid the taxes, took the capital gains, and now they're going to invest. Like, for whatever reason, they have this liquidity, right? They're looking at CrowdStreet as a way to sort of put that money to work, and do it in a very efficient, sort of high-tech manner, and then be able to track that portfolio over time. So we've been talking a lot about investing, but the other major benefit that the investors, or the major reason why they're coming to CrowdStreet, is they can build out a diversified portfolio and then track it over time on a quarterly basis when all the reports are published in that one place.
Yeah, interesting. A few days, I was going to say a few days ago, a little bit ago, I was checking, probably close to a decade ago now, we used to talk about the amount of money, qualified money on Wall Street. And it was like $13 trillion. Of that 13 trillion, about 2% was in real estate. So, you look at your diversification, it's just not there, right? And that's all we're talking about. Mm-hmm. Since you guys have sort of packaged this in a manner that allows people to get into your investments with qualified money pretty easily, I think I'm just going to cover it real quick. For anybody out there that's curious how they're going to buy into a CrowdStreet asset with an IRA, I mean, you really got two choices, and we can do it with 401k plans too. But if you have a basic account, what's going to happen, and CrowdStreet works with a variety of custodians that are familiar with their paperwork. But really what we're doing, we're not pulling money out of your retirement account. We're just going to move money from a custodian, and won't allow you to do what you want to one that does, and the investment's going to be submitted. So you're going to submit an investment authorization. It's going to be accompanied with paperwork from CrowdStreet, your agreements to buy, the operating agreement, a few other things, and the custodian's going to approve that investment. There's no reason they're not, unless Darren's the primary owner and you happen to be his dad or son, a disqualified party of the retirement account. They're not going to do that. But really, you're not pulling money out of the retirement account. You're just shifting the custodian for what's being used in this capacity. And it's a simple process, and you figure it's going to take a couple weeks. If you've got a checkbook IRA, you're just going to go talk to Darren or somebody in his firm, you negotiate, whatever deal you're going to be working on, and you're going to just write a check to them to make that investment. A solo 401k is going to work the same way. So I want to stress, we're not pulling money out of a retirement account. We're just shifting who the custodian is, or we shift the plan, and that stuff's easy. Don't be afraid of that. If you got questions, call us up, go over it. It's the basic accounts. Honestly, you don't even need us to be involved, but we're going to give you some direction there. The important thing, and this is another plus for what CrowdStreet's doing, and this was why I was asking about the debt. You've got, non-recourse debt, which is going to be required for IRA 401k compliance. And that is something that in a residential world, it's hard to find. There's some few national sources. Commercial world, it's more available, but you always have to look at the bad boy carve-outs. But this is a great place for you to put, if you want to diversify some money, it's a great place to go with it. And historically, and I'm glad we're going through this, Darren, because I think the last few times I talked to you, the 1031 component wasn't really as available as it appears to be now. But, so I guess with that said, there is product there now. So if we talk about the average life cycle of one of these investments, is there an average time? I mean, when they go full cycle, what happens? Those people, they're obviously going to, not obviously, hopefully they're going to have some tax exposure with gains that have been realized through the investment. And what happens on that disposition? Do they typically roll into another one? Are they able to do an exchange if that's a situation? Obviously, with the IRA 401k stuff, even with the IRAs, people need to be aware if you've got income or gain attributable to leverage, you're going to have some tax exposure. That's another conversation we can have another time. That's not the point of today's call. I just really want people to be aware this is a great avenue for you, and it's a place to diversify, and you don't need a pile of money to get into it. And I would just expect that, next spring, we're going to have a lot more people looking for places to go on things. But, Darren, you want to talk about sort of the life cycle of the asset typically and what happens where people go?
Yeah, absolutely. So we've done almost 500 deals. It's over 475, and we launch about 2 to 3 deals per week. And so I didn't check today, what the number is. So, and that's what you can expect going forward. There's going to be 2 or 3 deals a week, depending on the week. And some weeks it'll be 1, because it's not a perfect, design or launch schedule. As in the real estate world, things get delayed, and there's a lot of delays going on right now. But the average, the holding period of a deal is 5 years. And so, you'll see deals as short as 2 years. And those tend to be either the really opportunistic plays. We recently sourced an opportunity to invest in a banknote, and that banknote is going to, be resolved.
So let me interrupt you real quick, Darren. So you guys aren't just doing real estate deals. If you want to be an investor in a debt instrument, you package those also?
It's definitely more common to see actual common equity deals on our marketplace, right? Where you're actually investing with the company directly in this real estate. But we have now seen, and we expected it because of what's going on in the macroeconomy and the performance of real estate overall, that we saw this one of our first opportunities to invest with the sponsor. And we had a pre-existing relationship with the sponsor. And he said, hey, what do you guys think about buying the debt on these office buildings that are right down the street from my office? And I'm an expert in this office space in Minnesota. And so I think if we either buy this note and the borrower pays it off, we're going to do well, which is base case. And if we have to foreclose, which would be unfortunate, we're going to do even better. Right. So it was a pretty compelling presentation. And that was a 2-year hold for those investors. And we had a record raise. It was over $20 million in a couple of hours. So we have a tremendous amount of demand. That's another topic that we should talk about. But the average hold period is more like 5 years. That across all of the deals we've done, it's mostly a 5-year deal. And that's kind of the strike zone. We also do deals with 7 and 10-year deals, right? And so sometimes there's drivers to that that would cause a sponsor to want to hold on to something longer. As most of your audience members know, this qualified opportunity zone and qualified opportunity funds that invest in properties that are in those QOZs or qualified opportunity zones. that's a 10-year minimum or required hold, right? You could sell it earlier at 7 years, but you're going to actually miss out on a lot of the tax benefits and tax advantages by not holding it for 10 years. And so certainly there are deals, including the qualified opportunity zone properties on the CrowdStreet marketplace, which are 10 years. Some of our funds, we have funds as well as single assets, even though you'll find more single assets than funds. Some of those funds have 10-year horizons as well. So that's a quick answer to that question.
So do you have, I mean, people cross shopping, obviously you've got the DST tick arena, and now you're talking about OZs too.
Mm-hmm.
So people cross shop those different opportunities. And I mean, how do they get to you typically?
It's been 7 years of building up the reputation and being kind of a thought leader in the space and bringing on high quality sponsors and customer service to the investor community, and as they're going through the process of considering making their first investment, and serving up the right like tutorials and education around, maybe it's an asset class, like they're thinking about investing in student housing. Well, we just released an article yesterday about student housing, right? Like really that information flow, that knowledge that they need to make an informed investment decision, that's what sort of keeps them coming back, and that's what has helped the reputation. So that sort of like network effect of like a person had a good experience, so they tell their friend, like that's starting to catch fire now. But it's 7 years in, right? So we've worked really, really hard to develop that reputation. It wasn't happening 3 years ago because people were a little like resistant or hesitant to tell their friends about this online real estate, investing platform named CrowdStreet. But it's happening today, thank goodness, because of that commitment to their experience. Not to say, I mean, of course, we're not perfect. I mean, we're growing in leaps and bounds, and we've got, like every day trying to figure out how to provide the best investor experience with a volume of investors that are going bananas. But we also have a great marketing team. I needed to say that, like, you'll find us in the press and in blogs, and we're producing a lot of content out there. Right. If you go to our site, you're going to see us in your Facebook feed and things like that, which today is actually standard par for the course. But whatever we can do to first get people to just visit the site, right? And then if they sign up, that's great, right? And we just welcome them with so much information and try to understand, why are they here? What are their goals? And how might we, help them, get access to real estate to help them, achieve a better financial outcome. That's really what it's about. And I think is a key part of our new investor, our new investor sort of welcoming or acquisition, as they say, and keeping them engaged.
So Darren, if I came to you and let's just keep the numbers smaller. Okay. So let's just say I came to you with $100,000 and said, hey, I'm interested in mini storage, or I mean, what's a typical MO? Somebody comes in and says, hey, I've got X dollars to spend with you. Mm-hmm. And you're going to show me, or I'm going to probably be shopping through your portfolio, what's online, right? And something might look interesting to me, and I'm going to say, okay, tell me more about this one. What's the process to get in? What's a typical timeline? If and I know some of the projects are 1031 related, so as far as their availability for ID purposes and closing, what's a sort of, you talked about the debt offering that took a couple hours to fill $20 million fully subscribed, right? So what is the typical life of availability of a given asset? So if somebody's interested, if it's really a hot deal, it's probably gone real quick, right?
So investors, they show up to CrowdStreet. What's interesting is that there's 3 different ways for them to invest. They show up, and if they have a stated goal, first of all, they would fill out their preferences, right? I like storage, and I have $100,000, and I'd like to buy, 4 different storage properties. So I want diversification across the United States. Or maybe they say, I want to be all in Florida, right? Because I love Florida. For whatever reason, they can fill out preferences. And CrowdStreet's getting better at sort of serving up more of a personalized deal flow. And, it's depending on, is that deal flow available? And, to the extent that it is. So the standard experience at CrowdStreet is really one of a digital interaction, right? And so, if you've heard of these robo-advisors in the fintech world or the financial advisor, the online brokerage world, like Schwab has one, Fidelity has one, Robinhood is one, and they all have these new experiences for more of a digital interaction. But that's kind of a way to think about the primary experience on CrowdStreet. We certainly have customer support people, investor relations people available to answer questions about the experience. So we do have guides, right, to help get them comfortable. But it's largely digital, and it's largely like we present the information so that the investor can make an informed investment decision on their own. We don't give investment advice, just to be clear, for the primary experience of the CrowdStreet marketplace. But a couple of years ago in 2018, we realized that there's a lot of people who kept asking us would you please give me advice? And so we created CrowdStreet Advisors, which is a registered investment advisory firm. It's a sister company to CrowdStreet Inc. And investors that want to receive and build a portfolio which is custom built to their preferences can open an account at CrowdStreet Advisors, and they can bring in their other advisors. And so, we have licensed professionals at CrowdStreet Advisors that are part of an investor's team, right? All the financial advisors and licensed professionals that they work with, including lawyers and accountants and so forth. And so that's the second way to invest at CrowdStreet, and probably more of a white glove service, if you will, right? And especially if you have something that's a little bit more detailed, like I'm in a 1031 exchange, or here's what the tax strategy that my accountant told me to create here. How do we accomplish this? That's a service that's worth considering. And then the third way to invest is to simply invest in CrowdStreet vehicles. So we have our own kind of proprietary vehicles where CrowdStreet Advisors is actually the fund manager. And some of those vehicles are just generically diverse, right? You can just put $25,000 and get access to 20 different deals, across the United States. Others are really specific to a strategy. We just closed out a qualified opportunity fund. And recently we just closed out an opportunistic fund, right? Well, what does that mean? That means there's some distress out there, right? We're going to find it. And if it meets the criteria for this, distressed or opportunistic sort of fund, you can expect 10 of those different properties around the United States to be in this opportunistic fund. And forthcoming, and I'll leak out a little bit of this information because this will probably be published by then, but we're going to do an e-commerce fund. Well, what does that mean? Well, industrial has been one of the major beneficiaries of the entire pandemic. And, e-commerce is up 40-50% over 1 year, which is just amazing. And they need more warehouses. And so, that's the hot trend right now. We're going to create a vehicle for investors to get access to industrial and logistics property, most of which is going to be geared toward e-commerce. And that's one way to do it. $25,000 and you get access to all of these, e-commerce related vehicles.
Sounds like a great opportunity.
Yeah, I think it's going to be a hit. And when they come to us and they do specifically say, I'm in a 1031 exchange, can you help me? That does often, go to a specific person at CrowdStreet. So we have different tiers of investor relations people. Some of the people just answer questions like, I'm lost, I can't find my way around your website, right? Or what button do I press in the tech, interface, to people who, need something more curated and a higher level of service. And whether they sign up for the privately managed accounts, which is that custom portfolio service, or we can just, have a conversation with them and help them, a digital conversation, a chat, or a phone call, we'll interact with them. And again, whether we have an offering that we might just say, hey, go look at the ones with the tags, right? We have a filter on our marketplace. It's like, go to the filter and search 1031 exchange, click that button, and 3 out of 15 deals might currently be available that accommodate 1031 exchange, right? And yeah, I don't like those 3. Do you have any more? It's like, well, I'll tell you what, there's a couple of other, sponsors that we have relationships with. It's probably worth, connecting you to in the spirit of like servicing the community. So.
But I remember going back to 2013, a lot of the conversation we're talking about due diligence, doing all that. So you've got a whole team, and you are using your CCIM education every day in your current profession, it sounds like, Darren.
Shout out to the CCIMs, the whole entire institute, as well as the designees and candidates out there. I mean, it was incredibly valuable for me, opening my eyes and learning how to just learning about the built environment, as they call it, learning about real estate and the world around us. I am forever cursed. I can never get on an airplane and look down at a city and not think about all that real estate, or even walk down the street and not think about NOI and vacancy and the type of tenants. And real estate's just an amazing business. And it's just such a societal role. And whether it's good or bad, you can have an opinion, but it's critical to society. And I just love it. I love the people that I meet, and the CCIM education was key. I mean, I would just say that any people watching this, if they're looking to advance their careers in investment real estate, it's foundational, right? Go do it. You'll meet great people and you'll learn a lot.
It was interesting, Darren, when I was active, when I moved up here, anytime we'd go to a new city, we'd pull out the old directory and find out who the CCIMs were in that area, and search for them and use them, because that was a great place for us to get started. In those days, you think back that far, you didn't have that much information out there. I remember when you're doing research, digging through tax lists, and I mean, it was just a pain in the neck, and we'd look and see, where people, U-Haul, where people are going, and, coming and going and all that stuff. But, now there's so much information out there. But, I look at what you guys have put together as a real opportunity for people that are getting, they want to diversify into real estate, and yet real estate's, I mean, the upside is tremendous. I mean, I wholeheartedly believe in it, but it's not easy. I mean, it's hard work, and you might stumble through and be lucky a few times, but in general, I mean, you've got to really, work at it and stay on top of it. And I feel like, so often to diversify into it, people point to a REIT and like, doesn't really give you the benefits and burdens of ownership where your product's going to. And so if people want to buy into that real tangible asset world with smaller amounts, just to diversify, and it's all diversification. Mm-hmm. And, I go through it all the time with our IRA 401k clients, because, why would you buy real estate with an IRA 401k? You lose long-term capital gains tax consequences. Well, anything you buy with an IRA 401k is going to have the same tax treatment. So that's just a relevant question. And I just sort of look at it and say, hey, why not diversify further? This is a place you can go. The traps in a self-directed retirement world, if you take your IRA and buy things on Wall Street, you can make a poor investment. You can lose your money that way, but you're not going to commit a prohibited transaction. If you take and self-direct let's say you have a checkbook IRA or a solo 401k where you literally have the power of the pen to do things, they're tremendously powerful, but you could screw up, you could commit a prohibited transaction. So buying into your product is going to give people that diversification without the opportunity to commit the prohibited transaction typically. And I think that's a real good tool for people that want to diversify without, maybe having the hard work of dealing with tenants and, the terrible T's, as we all talk about. And to give them that opportunity, have somebody. I think the one thing that sort of falls out, you commented earlier about tenancy in common, and the securities laws, and the country club deal, right? You and I go play tennis or golf, and oh, by the way, we've got this, and anything that's a passive investment, the person that's running that thing, it ends up as security, and people don't realize that. So you guys have done the hard work to make sure you're packaging it correctly and taking care of that component without putting people at risk of getting in trouble for some securities transactions that they may or may not even be aware of. But I thank you very, very much for the time today, and I guess I'd like to know anything else, common questions, things that come up, people want to know. Before we sign off today, I don't want to take much more of your time, but things that you feel are really important to investors, what they should know if they're contemplating, something you've got going on, or something else maybe.
Yeah. I appreciate that and this time that we spent together. And this particular topic and what David and his companies, the services that they perform, open up a whole new sphere of advantages for real estate investors, right? Most of us would start off in the industry pretty simply, by buying a duplex or a single family house, and something really simple like that. And then as you graduate into things, or you're selling and you're rolling those proceeds over in your ex, things start to get a little bit more complex, right? And then you start to hear about these other aspects of real estate investing, and IRA accounts and custodians, and then your accounting bills on an annual basis, and all these K-1s are coming in. And so it starts, even for me, it took me multiple years in the business studying it, like as a professional, studying it to grasp some of these concepts. And so, for anyone who might be at that stage of their career, they're learning, right? I think that really highlights that, like, you're not alone. There are a lot of resources out there, and then there's great professionals that can help you. And yeah, David, thank you. The CrowdStreet marketplace is one of those places where you can learn and have sort of a self-guided tour. But we're also going to be, as given what our strengths are, and what like David and his firm's strengths are, we're going to call the professionals here. So it's just one of those things that you continue to learn as you go, and as long as you have great advisors, then you have a better chance of optimizing your returns and taking advantage, and of course avoiding mistakes, right? Yeah. None of us want to go backwards. So
definitely not.
It's been a pleasure to be here today, David. Thank you so much. I appreciate our long-term relationship at this point. Going back, I think it's 15 years. I think 2005 sounds about right.
Somewhere in there, probably. Pre last crash, right? So that was a rude one, but yeah. Thank you so much for the time today. Once again, Darren Powderly with CrowdStreet, and I'm David Moore with Equity Advantage, IRA Advantage, and look forward to doing lots of projects with you going forward. Darren, I'm also going to reach out. I want to get you in front of the CCIM chapter again here too. There's been some talk of getting you in there, so I wanted to wait until we could get you in person, but we may have to just do this again for the Oregon Southwest Washington chapter. So thank you so much for taking the time today.
My pleasure. Great to see you, and good luck for the rest of this year. And 2021 is going to be better year ahead.
And that's not saying a lot, but hey.
Okay, actually, a lot better.
Yeah, no, but one last comment before we sign off, since you said that. It's really interesting because when COVID hit, we all felt just a stop, a crash, but since then, you're probably feeling like we are. It's zooming along. We had a very good month in last month, and we're having a good month this month. So we're talking September, October, both ended up great. And so things that people want to do stuff, right? They want to make things happen, and you're open to help them make it happen, and so are we. So thanks again for the time, and best of health to you and the whole firm there, and take care.
Thank you. Stay healthy, stay strong. We'll talk with you soon.
All right. Bye-bye.